You should know that getting into a hedge fund is no easy task. It's not for the faint of heart either. Hedge fund managers are one of the most sought-after sources of industry knowledge, investment skills, and flawless implementation of deliverables, since so much money is at stake. The path to a hedge fund career requires determination, networking skills, and a fierce sense of competition. Hello and welcome back to the Finance Guardian channel. If you're interested in breaking into hedge funds, you should watch this video first to learn how the industry works. So hit that subscribe button and the bell beside it and let's get started. How do hedge funds work? A hedge fund is an alternative investment that pools capital from individuals and institutional investors to invest in diverse assets. Hedge funds may invest in anything from real estate to currencies and other alternative assets. This is one way hedge funds differ from mutual funds, which typically invest only in stocks and bonds. Most hedge funds seek absolute returns rather than relative returns, and they do so through a variety of complex strategies and securities. Absolute returns mean that if the S&P is down 25% and your hedge fund is down by only 15%, then that's still a bad outcome because your fund still lost money. Alternatively, if your hedge fund only makes 20% in the year while the S&P is up 30%, that's still an excellent outcome from an absolute standpoint since your fund has still earned money. A variety of complex strategies and securities implies that hedge funds do much more than buy and sell plain vanilla stocks and bonds. They can short sell securities, use derivatives, bet on mergers going through or failing, and become involved directly in events such as spin-offs and restructurings. A hedge fund differs from a mutual fund or an asset management firm since these firms often strive for relative returns, for example beating the S&P by 5%, and employ more conventional strategies such as buying and holding undervalued stocks. Hedge funds also differ from private equity firms because private equity firms usually buy and sell entire companies or significant stakes in companies, and they generally hold illiquid assets. What makes a hedge fund a good place to work? It's good to work at hedge funds if you are extremely passionate about the public markets and are more interested in following companies and other securities than making deals. Extremely passionate means that you read about the financial markets in books and other media almost daily. Your spare time is spent researching companies, creating investment theses, and buying and selling stocks, bonds, derivatives, and other assets. You have been a member of investing clubs and have participated in investing competitions. You trade your portfolio to avoid other responsibilities or work. Money is also a major attraction. Numerous factors will determine how much you earn in a hedge fund, including your role, the size of the fund, its assets under management, and the fund's performance of your unit within the fund. The pay in most hedge funds is heavily skewed towards bonuses rather than salaries, meaning that they can vary considerably depending on the role. If all goes well, you'll make a lot of money. Hedge fund jobs are among the highest paid in the financial services industry, according to the eFinancial Career Salary and Bonus Survey. A junior analyst or researcher in London can easily make £200,000 per year in salary and bonus, and the pay is comparable in New York. It is possible to earn more compensation in a hedge fund by becoming a partner rather than an employee. As a partner, you will invest money into the hedge fund and usually earn a share of its profits. As far as working hours in a hedge fund is concerned, it will not be as long as working in an investment bank or private equity job. In the hedge fund, you don't have to put in more than 100 hours a week. A hedge fund professional typically works 50 to 70 hours a week, so hedge fund managers maintain an excellent work-life balance regardless of how much they make. Job types within hedge funds. Let's now discuss what it's like to work in a hedge fund. Hedge fund jobs fall into two categories. The first is to work in the front office, which is what most people strive for, while the second is to work in the back office. Considering that the front office is the most attractive path in hedge funds, we will discuss it in detail. There are typically three options available to you in the front office. Number 1, traders. These people are also referred to as execution traders. There are two types of execution traders in a typical hedge fund. The first are those traders who come up with new ideas and execute them, while the second are those who only execute the opinions of others. Number 2, investment analysts, IA. Because investment analysts put forth the arduous effort to conduct research, generate new ideas, and assist top-level managers in making prudent decisions, they are also known as research analysts. Senior and junior analysts are the two rungs in the investment analyst career ladder. Number 3, portfolio managers. As the fund's boss, portfolio managers decide where to invest and what to buy or sell. They consult the research analysts and ask them questions about their findings. The research analysts are then invited to review the report and make sound recommendations if there are any concerns. Finally, the portfolio managers make the final call and instruct traders to buy or sell everything at the right price. Now let's briefly discuss the back office. It is the front office of the hedge fund that draws people in, so back office workers don't get much attention. But back office workers support the primary function of the fund. The technology team supports the system. The administrative ninja keeps things neat and takes care of minute details, and the chief financial officer oversees the organization's whole finance functions. What skills are required for a career in hedge funds? You'll most likely need an excellent academic record if you want to land a hedge fund job, and you'll need to be no stranger to hard work if you want to become an analyst or portfolio manager. As the game has become increasingly difficult, the best people in hedge funds are classified as exceptional decision markets, who research the markets for hours on end. It is important for hedge fund analysts to be strongly convinced about their investment ideas, and to be willing to defend those ideas when other analysts or portfolio managers question them. A common misconception about the hedge fund profession is that you must either be a math geek or a sleazy dealmaker to succeed. While hedge funds like to hire people with mathematical and data skills, these skills are not enough on their own. The ability to communicate complex investment ideas, innovate thinking, generate new ideas, and have flashes of intuition that can join up the dots is also part of what makes a successful portfolio manager or analyst successful. It's no wonder Citadel seeks people with sound judgment, good communication skills, and a will-to-succeed attitude. Or to Sigma says it wants creative and intellectually curious people. Applicants for quantitative positions will need a degree in a quantitative-related field, but not all hedge funds require a specialist degree discipline. Strategies to break into hedge funds. If you want to get into a hedge fund, keep these things in mind. Number 1. Become familiar with the recruitment process. Unlike investment banking interviews, hedge fund interviews are much longer and different. The interview will consist of 3 general rounds: fit round, HR round, and partner round. Additionally, you will have to participate in a case study analysis session. You will be given a few days to complete this task, and a set of financial statements, balance sheets, and cash flow statements will be provided to you. Then you will be asked to prepare a 1-page summary of the company's valuation. You should be aware of what questions are asked during hedge fund interviews. These 4 questions are typically asked. Briefly describe your background. Tell your structured story. Why hedge funds? Be specific in your answer. Have you ever invested? If so, what sort of investment have you made? Share your experience. Which stocks do you like the most? Mention your preferences and explain why you choose them. Number 2. Take part in internships. You can only learn about trade secrets by becoming an intern. If you are unfamiliar with hedge funds and come from a different background, you can read about hedge funds and do a few internships. These internships must be conducted directly in hedge funds so you can understand how hedge funds operate. Number 3. Network. Having the right network is important even if you do not have the required background or knowledge at the moment. It will make things much easier for you if you have enough contacts in the industry. Of course, you must still acquire the necessary skills and knowledge base, but you will still be advantaged over someone who has never engaged in networking. Number 4. Stay committed and strive for a partner status. You should not leave hedge funds even if you encounter failures initially. The market is volatile and the risks are high, but if you persist, you'll eventually gain partner status, and within a few years, you'll be able to retire and start your own business. The hedge fund is not for everyone. If you're looking to make money in a hedge fund and have a risk-taking appetite, then you have the ideal combination to become a hedge fund manager. But the road may not always be smooth and rosy. The only way to become the best in the industry is to be steady and keep pushing yourself. And that is all the time that we have for today, folks. We hope you enjoyed this video, and if you did, please hit that like button. If you're new, subscribe to our channel to remain updated about our future videos. We'll see you next time.